Hey guys, welcome back to Sky Talks Trading. My name is Sky and I'm on a quest to invest. Today we're going to be talking all about SoFi Stock. As always, just to let you know, I'm not a financial advisor. These are just my opinions only. And my opinion on SoFi Stock is that it could easily reach $30. And in fact, I think that is a very conservative price prediction. So hopefully by the end of this video, you'll see why I am so bullish on this stock. As I'm sure you're aware, technology is pretty much changing everything in our life. But something we don't talk about a lot is how it's changing banking, resulting in artificial intelligence deployment in data collection, data integration and analysis, and also fintech. According to an Industry Arc report, the fintech market is expected to grow at a compound annual growth rate of 8.7% between 2021 and 2026, and is anticipated to be worth $161.2 billion by 2026. Social Finance, which is SoFi, was founded in 2011, and it is a fintech or financial technology company that offers a lovely suite of financial products through its platform, a one-stop shop app, if you will. The app speaks for itself. Download the app, try it. The company's three major business segments include lending, a technology platform, and financial services. Their lending services include student loan refinancing, personal and home loans, and then with its technology platform, Galileo, which I think is a very cool name, provides services including an authorization application programming interface, API, to financial and non-financial institutions. The company's financial services include insurance services under SoFi Protect, a SoFi credit card, a Lantern Credit, a financial service marketplace, and last month, SoFi Technologies made its grand debut on the Nasdaq as an independent company. Yes, it was in fact a SPAC merger with blank check company Social Capital Hedosophia. In Q1, the company posted adjusted net revenues of $216 million. On June 28th, SoFi's lockup period expired. So if you don't know what a lockup period is, it is just the length of time after the company goes public when early employees or shareholders in the company may not sell their shares. And this time, it can vary, but it's usually between 90 to 180 days. Following the expiry of the lockup period, Rosenblatt Securities analyst Sean Horgan reiterated a buy and a price target of $30. And that would be an upside of 65.9%. So yes, Sean Horgan saw a unique buying opportunity as a result of this recent selling and ahead of a potentially significant upside catalyst: bank charter approval. In October last year, SoFi received preliminary conditional approval from the Office of the Comptroller of the Currency, OCC, in the United States regarding its application for a national bank charter. However, this application will still need to be reviewed by the Federal Deposit Insurance Corporation and the Federal Reserve. And once that approval goes through, that'll be a huge catalyst. To me, it seems like SoFi has to have a sharp rebound soon. It makes no sense for such a high quality company with top of the line management team primed to be a big disruptor in one of the fastest growing sectors to still be in this low price range. But it makes it a bargain right now. Also, I think it's really, really foolish for hedge funds to continue to double down when they could actually make so much more money on the ride up. Kramer actually just included SoFi as one of the post-merger SPACs to buy now. SoFi has all buy ratings from analysts, to be honest, and with an initial $30 price target. SoFi also has one of the highest short float percent at around 45%, which means many millions of shares have to be bought to cover those short positions. Let's not forget that Square and PayPal took almost 2 years each to double in price, and they both saw early drops of about 30%. So it's all about holding strong, seeing the long-term vision. Because fintech is the future, without a doubt. After watching the SoFi CEO on CNBC this morning, there was lots to learn from that, actually. For instance, I didn't know that The CEO is an ex-Goldman employee. So imagine if his old bosses came knocking to acquire SoFi. He has the relationships to actually make that happen. It's just a possibility to consider. The large amount of options trading in the past week indicates SoFi could result in a jump up of upwards of 40% in the next 3 months alone. So the interesting angle for me is that with fintech being more popular than ever, SoFi getting acquired is also a very big possibility, as SoFi's popularity has only grown and it's only going to continue to grow. SoFi is a very attractive acquisition for any of the big institutions beyond just the popularity amongst just consumers. You can't buy the viral marketing SoFi has received in the past month. Based on the options alone, this highly shorted stock could turn around at this 16, 15 level and straight back up past 20 without pulling back if we get a squeeze. SoFi will only continue to get a lot of brand exposure in the years to come thanks to SoFi Stadium, which is home of the Rams and Chargers. It will host the 2022 Super Bowl, the 2026 FIFA World Cup, and the 2028 Olympics. So yeah, SoFi actually bought the naming rights to a football stadium, SoFi Stadium, which is home of the Los Angeles Chargers and the Los Angeles Rams, which opened in July 2020. So that is a really great marketing scheme. Also, the CEO, Anthony Noto, is an American businessman and former COO of Twitter, managing director at Goldman Sachs, and CFO of the National Football Association, hence the SoFi Stadium. In March, SoFi bought Golden Pacific Bancorp, which will help it lower cost of capital, increase net interest margin, and increase its growth in lending. SoFi's Galileo offers fintech companies application APIs for core digital banking functionality, enabling companies to build out payment, card, and digital banking products. Last quarter, total Galileo members skyrocketed 130% year over year to reach 70 million, compared to 75% in the year ago period. The best thing about SoFi are the profits. The company has posted positive EBITDA for 3 consecutive quarters, with the last period showing 70 million year-over-year growth. SoFi projects a 43% compound annual growth rate, which actually surpasses PayPal and Square. What's so powerful about it is it's all in one online finance app angle, because the more products the customer uses, the better the experience. And if they don't have to go anywhere else for any of their needs, they're just going to stay on that one app. It makes it harder for them to leave the platform. They've recently added the ability to invest in IPOs, and that will definitely attract even more users to the app. I really like that they just keep expanding, to other segments like, promoting the investing side of it and in-house ETF sections. The investing section boasts 0% commissions, but fees for different kinds of services are present under the surface. The company also seeks to promote their own ETFs and make it easier for investors to find and invest in them. Basically, these are all the reasons I'm very excited and bullish about SoFi. I don't think this is a short-term play at all by any means. I think it's definitely one that you want to buy and hold and keep in your portfolio and see that nice growth. So guys, that is my take on SoFi stock. Let me know what you think in the comments below. Thank you so much for watching, guys, and until next time, have a great day.